Hi everyone.
Welcome back to the channel. Today we're diving into 38 essential insurance keywords that you need to know if you're studying for your insurance license. Whether you're just starting out or need a quick refresher, this video will break down each term in a clear, easy-to-understand way. Let's get started. 1. Absolute assignment. Absolute assignment is when a policyholder transfers full control of their insurance policy to someone else, like a bank or another person. The new owner gets all the benefits, but if it's used to secure a debt, the original owner keeps rights to anything beyond that debt. 2. Accidental death benefit, multiple indemnity, rider. This rider pays extra if the insured dies in an accident. For example, if the policy is for $100,000, the beneficiary might get $200,000 or $300,000 if the death is accidental. It's a cost-effective way to add extra coverage. 3. Accelerated benefits. Rider. If the insured is terminally ill and expected to live less than 12 months, this rider lets them access part of the death benefit early. But remember, this reduces the final payout to the beneficiary. 4. Assignment clause. This clause allows the policyholder to transfer their policy rights to another person or entity. It's like handing over the keys to your insurance policy. 5. Automatic premium loan provision. If you miss a premium payment, this provision lets the insurer automatically take a loan from your policy's cash value to cover it. But if the cash value runs out, your policy could lapse. 6. Cancelable policies. These are policies the insurance company can cancel at any time. They're not very common because they don't offer much security to the policyholder. 7. Change of beneficiary provision. This lets the policyholder change who gets the benefits, unless the beneficiary is irrevocable, meaning they can't be changed without their consent. 8. Change of occupation provision. If the insured switches to a riskier job, the insurer can reduce benefits. If they switch to a safer job, the premiums might go down. 9. Claim forms provision. This says the insurer must provide a claim form within 15 days of being notified of a claim. If they don't, the claimant can submit proof of loss in any format. 10. Conformity with state statutes provision. If any part of the policy conflicts with state laws, this provision automatically adjusts it to comply with those laws. 11. Consideration clause. This is the policyholder's promise to pay premiums in exchange for the insurer's promise to pay benefits. Think of it as saying, "Here's my application and premium, please insure me." 12. Cost of living. Rider. This rider adjusts the policy's face amount to keep up with inflation based on the Consumer Price Index, CPI. 13. Entire contract provision. This states that the policy, riders, amendments, and application make up the entire contract. Nothing else counts. 14. Exclusions. These are things the policy doesn't cover. Always read the fine print to know what's excluded. 15. Free look period. After getting a policy, you have a set number of days to review it. If you're not happy, you can return it for a full refund. 16. Grace period. This is the extra time you have to pay a premium after the due date without losing coverage. For life insurance, if the insured dies during the grace period, the beneficiary gets the death benefit minus any unpaid premiums. 17. Guaranteed insurability rider. This lets the policyholder buy more coverage later without proving they're still healthy. It's great for life changes like marriage or having a baby. 18. Insurance with other insurer provision. If you have multiple policies for the same risk, this provision ensures the benefits are prorated so you don't get overpaid. 19. Insuring clause. This is the insurer's promise to pay benefits if a covered loss occurs. It defines the scope and limits of the coverage. 20. Legal actions provision. You can't sue the insurer until 60 days after submitting proof of loss. It's a waiting period to resolve disputes. 21. Misstatement of age or sex provision. If the insured's age or sex is wrong on the application, the insurer can adjust the benefits or premiums to reflect the correct information. 22. Non-forfeiture options. If you cancel a policy with cash value, these options let you keep some of that value, like taking it as cash or using it to buy a smaller policy. 23. Notice of claims provision. You must notify the insurer of a claim within a reasonable time, usually 20 days after the loss occurs. 24. Other insurance with this insurer provision. This limits the total coverage one person can have with the same insurer, no matter how many policies they have. 25. Payment of claims provision. This specifies how and to whom claims are paid. For life insurance, it's usually the beneficiary. For other claims, it could be the insured or a third party like a hospital. 26. Payor provision. If the person paying premiums for a juvenile policy dies or becomes disabled, this rider waives future premiums. 27. Physical examination and autopsy provision. The insurer can require a medical exam or autopsy, if allowed by law, when a claim is pending. 28. Policy face. This is the summary of the policy, including the type of coverage, the insured's name, and the policy term. 29. Proof of loss. This is the documentation you must provide to the insurer to support your claim, usually within a set number of days after the loss. 30. Reinstatement provision. If your policy lapses, you can reinstate it by proving you're still insurable and paying any past due premiums and interest. 31. Relation of earnings provision. If you have multiple disability policies, this ensures the total benefits don't exceed your actual income loss. 32. Return of premium rider. This rider refunds all premiums paid if the insured dies within a specific period or at the end of the policy term. 33. Social Security rider. This provides extra income if the insured is eligible for Social Security but hasn't started receiving benefits or is denied. 34. Subrogation. This lets the insurer take legal action against a third party who caused a loss so they can recover what they paid out. 35. Time limit on certain defenses. After a set period, usually 2 to 3 years, the insurer can't deny a claim based on misstatements in the application, except for fraud. 36. Time of payment of claims provision. The insurer must pay claims promptly, usually within a set number of days. For disability claims, payments are made at least monthly. 37. Unpaid premiums provision. If there's an unpaid premium when a claim is made, the insurer deducts it from the payout. 38. Waiver of premium rider. If the insured becomes disabled, this rider waives premium payments but keeps the policy active. It's like hitting pause on your premiums. And that's it. All 38 keywords explained in simple terms. If you found this video helpful, give it a thumbs up, share it with your friends, and don't forget to subscribe for more insurance tips. Good luck with your studies, and I'll see you in the next video.